ticker symbol SMCI. It's one of the key names behind the AI infrastructure boom. The company builds server, storage, and rack-scale systems that is used in data centers, cloud computing, and AI workloads. One of the interesting facts is that Supermicro has become known for its energy-efficient designs, including liquid cooling technology, which matters a lot for AI hardware that gets hotter and it needs to disperse the heat somewhere. And also, SMCI is very volatile because the stock swings on AI growth hype, new order flow, financing moves, and government headlines. Recently, there's some scandals around the company. Also, it's tied to some federal government news. It definitely moves a lot. With all that said, let's look at its fundamentals. Let's look at its financials and to see if it's a buy for the near term. It might still have some room to run. Looking at its fundamentals, forward PE is at 9.45. Forward PE is like the regular PE, but forward looking. It's based on future earnings. Below 10, so it's relatively cheap, right? It's not that expensive. It's not like Tesla. NVDA is around 20, so it's cheaper than NVIDIA. Free cash flow, it's at negative 6.85 billion. So the company doesn't have free cash to move around, to work on research, spending. That is a little bit of concern. Revenue growth is at 40.6. It is how much a company sales have increased over time. We want the company to keep growing. 40 is a really good number. It's growing fast. It's scaling fast. Company is getting bigger. PEG ratio, price earnings to growth ratio, it shows whether a stock is cheap or expensive relative to how fast it's growing. It's like the regular PE ratio, but add a growth factor to the formula. So the reading is PEG ratio around 1, it's fair value, meaning PE matches the growth rate. Less than 1, it's possibly undervalued. It could mean it's at a discount rate for investors like us. More than 1, it could be overvalued, so we might be paying premium for the growth. SMCI is sitting at 0.34. It is very undervalued, so looks like it's a good deal for us if we want to get in. ROE, return on equity, it is how much profit a company makes for every dollar that shareholders invested. It is how efficient the company is generating money for investors like us. We want the company to be very efficient making money. It's at 17.88, less than 20. So it is good, but not that excellent. ROE below 10 is weak, around 10 is okay, 15 to 20 is good, above 20 is excellent. For example, Micron is above 20. NVIDIA is above 20. SMCI is 1788, so it's not bad. Looks like the only red flag is its free cash flow. Besides that, it's all positive. It looks like it could be a small buy. Then let's look at the technicals if we do want to buy, where to buy. Looking at the chart, you can see it's very volatile. It swings up and down a lot. So if you do want to buy, where to get in, it doesn't look like it's a good time to buy right now. A good price to get in would be around 40. If you want to be safer, get in around 45 to 50. You would be like, why are you crazy? Right now it's even cheaper. Why are you buying more expensive? Because it's below the 200 SMA. When it's below 200 SMA, it has more chance to go lower or stay down longer. So sometimes a cheap stock or discounted stock, there might be a reason, right? There might be a reason why it has a discount tag on it. Why is it marked down? So we want to wait until it goes above a certain threshold and get in there. So after it stands above the 200 SMA and stand firm, then it has a higher chance to go above and beyond. 40, or even if you want to be more conservative, 50, that would be a good place to buy because right now it has stand up firm above 200 SMA. Although it could come back down too, like here, but the higher probability it will stand up strong and keep going. Take profit would be 80 to 100. The reason is that you can see there is a lot of consolidation here. There is a lot of resistance here as well. So get in at 40 and 50 and take profit around 80 to 100. And cut loose would be below 30. If you ever get in here 40 to 50, but it comes back down below and then stay down below, there's no signs of life. It doesn't even try to come back to attack the 200 SMA. That might be a sign that we need to cut loose and move on to a different stock. You can definitely hold and see if it will go up again, but that might be a long wait. If you want to transition the invested money to a different growing stock, that might be a better idea because we don't know how long is the wait. If you like chart reading patterns, you could say this looks like a double bottom, right? And we might go up after that. Yes, it definitely could be, but where is the bottom? Always have a entry point, take profit point, cut loose point, and ready to move on. If you miss the first entry point 40 to 50, if you want to add, where is a good add point or when to add? It would be 50 to 60. That would be a good add point if you feel like you want to add more share. The reason I say 3 months outlook is because we don't know what will happen in the near future, especially SMCI. This case, it moves up and down. There's a lot of news, government ties, federal regulation tied. If you don't take profit or you keep on holding it when it goes down, could be dragging down your portfolio, right? Personally, buy and hold is not a good strategy. I learned that from many real examples. So take profit while you can, cut loose if you have to, and move on. Of course, we can't sell at the top, but don't hold it thinking it will keep going up. Some companies do, but some don't. They would quietly disappear. So enough of the horror story. Let's talk about its earning. Important days for SMCI. August 4th, expected move is 13%. It could be a chance for it to come up, poke above 200 SMA, and then keep going. Or it could go even lower than $20. We can see since all-time high, 122, right now it's at 28, it's almost 80% off. It looks like a bargain, but we don't know, right? It could go even lower. The earnings coming up could be a determined point. That's it. Thank you for watching. I'll see you again.